I
We
think I'm
are live. Welcome back,
excited.
everyone. Thank you for joining us once again, another Monday here at Magnet Monday. We are super excited to have you back with us because today we're going to talk all things lending. How are you, Erica?
I'm doing fantastic. Thank you so much, Dee. And we have two amazing special guests. Ray Palacios, he is a Florida lender and licensed in other states. And we also have Sal D'Angelo. So he's with California and also in Florida. So Ray, can you please introduce yourself to the public and to everyone that doesn't know who you are?
My name is Ray Palacios. I'm with First Origin Mortgage Lenders. I'm the CEO. We've been open for about 16 years now, or almost 16 years. I've been a banker for the last 28 years, basically pretty much since I was 18 years old. So not to age myself.
He's 19
Wow.
now.
Sal, please introduce yourself.
Yeah, I'm Salvatore D'Angelo. I'm out of Sacramento, California, and Miami. So working in California and Florida. Been in finance about 6-7 years now. Mortgage broker at New Way Mortgage, and that's pretty much it.
Well, we are so glad to have you both here. Thank you so much for making the time. We know that everything that you guys tell us today is going to be of so much value for our audience. So we want to get right into it. Let's start by talking about what's on everyone's minds. How are mortgages changing?
Well, that's the magical question.
Yeah.
I mean, obviously, for the last 10 years, mortgages have been changing dramatically, both by how we verify mortgages and the types of programs. After the financial crisis, there was no 5% down, whereas now there's a conventional 3% down. More so recently, the adjustable rate mortgages are making a little bit of a comeback.
Right.
And we're also integrating more HELOCs into our purchases.
Absolutely.
The purchasing power a little bit back to the buyer.
Right. And so we know that you're in California. So tell us a little bit more of how you see the market going on over there.
Yeah, I mean, I think they're pretty similar. I know, at least in our region, our pending volume was down about 22% last month. But as far as how mortgages are reacting, I think with the Fed trying to fight inflation and the rate hikes and things of that nature, that's kind of their primary weapon against inflation. You're seeing higher rates. We're seeing more non-QM products being used. Definitely more HELOCs and piggybacks, especially with things that are closer to those jumbo type loans. If you could get a high-end conventional limit and kind of utilize the piggyback. So I don't see too much of a difference as far as my business goes. It's moving forward, but they definitely have to be a little more creative right now, and you have to know what you're doing, and it pays a lot to be knowledgeable right now.
Yeah,
That's key.
Yeah.
Do you have anything to say, Ray?
no, definitely. I mean, obviously, if you got pre-approved 6 months ago, your purchasing power has gone down dramatically.
Mm-hmm.
If you were qualifying for a $600,000 mortgage today, just 5 to 6 months later, you're qualifying only for about 500,000. And it's a series of things, not just mortgages, but insurance rates have gone up. Taxes on properties have gone up as well because of the drastic increase over the last 2 years in values of properties as well. So all of that stuff plays a factor in purchasing power for the buyer.
That's I know that's happening a lot. So that's one of the things that we want to talk about today, because we're going to put this in YouTube. People are going to start asking questions. What should we expect happen here in Florida specifically with everything that's changing right now?
Obviously, in the state of Florida, and much like California as well, and I'm sure Sal will touch on California later, prices have gone up dramatically. We're one of the hottest markets in the nation, or we've been the hottest market in the nation in the last 2 years, or one of. And right now we're getting to that level of price per household that people are starting to find a little bit hard to attain. And Sal had touched up on inflation and all that, and this all contributes to the inflation, or the inflation is contributory towards that. And it's, you know, the lowering of these prices is going to happen, unfortunately. Whether it's going to be like 2008 again, I seriously doubt it. But I do think we are going to see some sort of a pullback in prices as that purchasing power doesn't get up to that 6, 7, 800,000 range for these households. So you're going to see a lot of buyers pulling out of the market and then just winging it and renting for a year or two until the market pulls back to their range. Unfortunately, you know, so we are going to see some. A lot of areas in Florida, probably the entire state of Florida, go down in prices. My estimations, and from all the meetings that I've been in with Fannie Mae and Freddie Mac, are probably estimated to be about 5 to 10%, maybe 15. And then we'll probably see a rate of stagflation from there, where it plateaus and stays the same for a little bit until everything turns back into a buyer's market.
Okay.
Yeah, that is
Yeah. Sal, do you want to input anything, or?
Yeah, I mean, we're seeing similar things over here. You know, I don't think at least everybody I'm talking to, all the experts out here, we're seeing, you know, 3 to 5% is what we're kind of assuming the correction will do. And then, you know, about a year or two, once we get a grip on inflation and everything like that, you know, rates will drop again and increase purchasing power. I think right now it's important to know, you know, like UWM, I don't know if you guys use them. You know, their mortgage insurance is a little less expensive than most people. So it does increase the purchasing power for your client. It's just little things like that'll help people get into homes. I think if we took today's prices and we look 5 years down the line, it's still going to appreciate. So I think it's still a good time to get into a house. I think in the long term, you're going to gain money off of the home, but yeah, we will see a slight correction just because of purchasing power for sure.
Yeah, we won't know when that correction comes, because we are still going upwards.
Yeah, we are, and I mean, from everything that I'm reading and watching, they are expecting, you know, us to be officially in a recession by the end of the year or early next year. And at that point in time, you know, a little after that, we might have to lower rates to kind of get things moving again. So we'll see how it plays out. It's a very interesting time in real estate.
Absolutely.
Absolutely. That's the thing. Like, you know, from our perspective, like being inside the industry, it's a little bit different for us. But for, you know, people that are thinking of buying or refinancing or things like that, it looks a little different for them as well. So I am not a mortgage loan officer. So I want to know, what are the different types of loans? Like, what, you know, how can I get into buying a house, or what's the best one for me, for example?
So it really just depends on your situation, right? Like, for example, I've got clients that are in, you know, we call CalHAFA. I don't know if that's what you guys call it in Florida, down payment assistance programs.
Right.
All the way up to jumbo, right? So sometimes a down payment assistance program is a good program for somebody to get into their first home. If they can put enough money down and they can get into a conventional or an FHA, I always advise them to stay away from down payment assistance. If you do get into down payment assistance because of the interest rate, you're definitely going to want to refinance at a later date. If you're looking at a certain price point, you know, you got to look at your jumbo options. It's really per client. It's a whole different set of questions, and you definitely want to talk to a professional, and you do your research online and do YouTube, but sometimes those guys don't know what they're talking about either. So you definitely want to talk to a loan professional.
Right. Yeah, because we hear that a lot, like, oh, when it's a first time buyer, like get some, you know, down payment assistance or something like that. So I'm glad that, you know, we can talk a little bit more about it. And you guys as professionals, you can say, like, stay away from that if you can, you know?
Yeah. Well, the down payment assistance programs are going to have income limits. They're going to have loan limits, stuff like that, which is going to make it a little bit harder for the professionals to put you in a specific program that may or may not suit your needs. We might be able to give you more credits on an FHA program than you can get on a down payment assistance program.
100%.
Things like that. So we can, if you find the right lender out there that's willing to take that time and help and look at all of your options, not just put you in one, you know, a square peg in a round hole, you know, that's going to be your key, is finding the right person.
Absolutely.
think-
And I'm so sorry. I know that there's a lot of push here. Sal, I don't know if you know this, but there's a lot of push right now for a program that's called Home for Heroes, which everybody is, you know, I've seen it in social media and all of that, but they really need to explain what is the catch if the borrower wants to refinance afterwards. You know, that's the key, because, you know, I don't know mortgages. I don't do mortgages. I only close them. But I like to know, you know, what are the benefits and what is not a good, you know, solution for our clients when they're actually buying.
I think one benefit that we have within this market, and it'll become more so as it turns into a buyer's, you know, market, that, you know, if they can come up with some type of money, sometimes if you're with the right, you know, agent, if you're with the right agent, they're going to negotiate some closing costs for you. That seems to be happening a little bit more right now. So maybe it's, you know, slightly over listing price or out listing price with some seller's credits that are given to the buyer. That'll soak up some of that down payment. I mean, I'm sure Ray will attest to this. If, you know, you can stay away from a down payment assistance program, your total fees and you know, everything like that, it's going to lower your total monthly mortgage most of the time. So it is more cost effective for the client. So there's a lot, again, a lot of ways to skin a cat. I don't know about the Hero Home Buyer Program. You're going to have to touch on that one, my friend.
Well, Hometown Heroes is a brand new program in Florida that just came out. The catch is, and there's a lot of misconceptions on that program. Everybody expects to get 5%. Oh, they're going to give me $25,000. The key words there is up to $25,000 or 5%, whichever is lowest. And the up to can just be $2,000. Now, what I am being told and what I've heard from other lenders as well is that the average payout right now is about between $4,000 and $5,000 for Hometown Heroes. The other catch is you do have to pay that back. So it is attached onto the property as a second lien.
Yeah.
So later on, when you do need to take a HELOC or cash out on some equity or something like that you need for an emergency, chances are when you go to take that HELOC, you have to pay that lien off, because they will not subordinate into a third position. So it's not as great as everybody thought it was going to be. I think they could have done a little bit better with that. And then not every lender has their Hometown Heroes program. I will tell you though, also, as far as borrowers, not every borrower qualifies for that. So just because you're a police officer or a teacher or a doctor, you are in that profession, but there are income limits, there are loan limits. So we actually had several clients that we closed recently that were, you know, in a police department. And once you start getting into these $600,000 purchase prices, your income needs to be above that income limit to qualify for the $600,000 loan. On top of that, they did mention something about lower rates. There is no conventional specific product for Hometown Heroes. So it doesn't necessarily mean that you're going to get a lower interest rate just because you got a Hometown Heroes. It just means that they're going to give you $4 or $5 grand towards your closing costs. You're probably going to spend about 60 to 90 days applying for this thing. Maybe the seller's not going to wait for that 60 to 90 days. No. And your lender can probably just, you know, give you some credits for the 4 or 5,000 instead of going through that hassle.
Wow.
And we have similar programs in California. We have one that goes up to 10% as far as, you know, down payment assistance. But again, you factor in the interest rate, you factor in the debt to income maximum, which is lower than a conventional or an FHA. And then you're looking, I think, with the income restrictions and everything, if they fit, the max amount you can finance, I think, is like 346, or it comes down to something along those lines. And I mean, as far as, you know, California goes, it's kind of tough to find a home like that. So that doesn't work for everybody. So that's a very small demographic that it's helping out.
Yeah.
Wow. So talk to us about, since you mentioned California, and I know you're there, talk to us about the market in California, because I know we're getting a lot of people from here, from California. I met you over here coming down. It's like, I also want to move. I don't want to be in California. And that's pretty much what we're getting here. So talk to us about the market, what's happening in California right now. Why does everybody want to be in the Sunshine State?
So I read an article today. So San Francisco is the #1 city people are moving out of.
Wow, okay.
Los Angeles is number 2.
Writing it down.
Guess what number 3 is?
No.
New York City.
Okay. I thought you were gonna say Florida. I'm like, no.
San
But
Francisco.
I think, yeah, a lot of people, a lot of people from the Bay Area and LA will move to, the Central Valley because they're looking for an affordable home. Could very well be with what's going on with the market as far as increased prices and things of that nature to find something more affordable. People from like where I'm at right now, Sacramento area, a lot of people are moving to Nevada, Idaho, Texas, Arizona, just to find more affordable housing and a better, way of living, essentially. For me, I don't like paying taxes, so I want to go to Florida, and you guys have an Italian running the show, so I like it out there.
Yeah, and it's good to know because sometimes we think about saving like in the moment, but I'd rather save in the long run. I think that's like kind of like the mindset about what you were saying before about like the down payment assistance, like things like that. So I'm glad that you mentioned that because that's one way of viewing it, and I think it's the best way. And also talking about like why are people moving into Florida, because it is a better quality of living. It is more affordable. Like you mentioned, Texas, Idaho, all of these places, like you can get, if you get approved for a $600,000 home, you can have a mansion in Texas rather like a 2-bedroom apartment in California, maybe. And if so, we're happy that you guys are talking about this. What can we expect for 2023?
You want to take this out, or you want me to start, or?
Tell us what how you see it from your point of view.
Listen, I can tell you it'll probably get a little bit worse before it gets better.
Right.
So from here to the end of 22, it will definitely get worse. I expect middle of 2023 to the end of 2023 to already start plateauing, because we'll know this week how much the Fed increases rates on Wednesday, whether it's 0.75 or 1%. But and the expectation is that they are only going to raise rates up until the beginning of 2023, which means there is a possibility that rates might go back down towards the middle to end of 23. Okay. So that's what we're keying in on, and it might be a good 12 months of pain, but we've been through it before. We've been through worse before, and I think we'll come out of this one on top as well.
Definitely. And again, like I said earlier, I mean, the Fed is fighting inflation, and interest rates are the primary weapon, right? So, like Ray said, expect at least 2 more rate hikes before the end of the year. I think the good news, if you're in real estate, especially if you're a loan officer, the deals that you are putting into contract right now, I think you will have a good refinance opportunity for your clients, mid to late 2023. Hopefully that's when it comes. So, you're going to be able to help your clients significantly lower their mortgage payment to the homes they're getting in right now. And I think it will be a good year. We're definitely going to have some cold times. We really got to tough it out, but I don't think it's going to be too bad.
Fantastic.
I think in my opinion, we're right now at the levels that we were going to be at the end of 2019, early 2020, because we were increasing rates at the end of 19 and early 2020 up until the pandemic hit. But
I think it's normalizing. I think the market's normalizing.
That's the thing. We had 2 monster years. It's slowing down a little bit. It's probably going to be a little slower for us by about 20% or so for the next year or two, and it's back to normal.
100%.
That's I love that we do this. Last week we were talking about the market specifically in South Florida. And I love that every week now we have really, really, really good topics. And trust me, we're gonna share this. We're gonna put it in Instagram Live. I might even boost this because there's a myth that people have out there, and we want D and I want to do this and bring information to people so they are educated by professionals. I want you guys to give us an insight or recommendations. If, for example, right now I'm planning to buy a home or sell my house, what are your recommendations in this moment?
I think, go ahead, Ray.
Go ahead, Sal. I took the lead on the last tough question.
I know, and you called me out for it. Just kidding. I think you got to get with the right team right now. So I think more than ever, it's really important to, screen out your real estate agent, screen out your loan officer, make sure they're educated, make sure they know what they're doing, make sure they know the market well. They get you with an agent that knows how to negotiate for you, because it is a tougher time, but within tougher times, sellers are also in a tougher time. So they are more willing to negotiate. There's many ways to skin a cat. They need to set you up for a refinance in the future. I'm not a big fan of the buy down right now, unless it's to do for qualification purposes, because most of these loans are going to be refinanced in the future. So
Explain what's the buy down, just because I know what it is,
yeah,
but there's people like Dee, she doesn't know what a buy down is, please.
100%. So essentially, let's say you go into contract on a home, and part of your negotiation is you get in at listing price and you want a 10K credit to put towards your rate. So if your rate, let's just say for numbers sake, was 6%, you put that 10K towards the rate. For the rest of that 30-year loan, you're at 4.5. So it saves you a decent amount on your mortgage payment each month. But I think the better route right now would be to take that 10K and put it towards your closing costs, so you have less out-of-pocket expense. And then you're going to wait about 11 to 14 months. And in about 11 to 14 months, you're going to refinance at a lower rate, probably significantly lower than the buy down rate. And if you were to use that money as a buy down, kind of disappears if you refinance. So I think we got to kind of be setting, I don't know, Ray might have different feelings about this, but I think most people need to be focused on the refinance in the future and less out of pocket while they're purchasing the home.
No, I agree 100%. Right now, the buy down for interest rates, and Fannie Mae and Freddie Mac, they're not dumb. They know what they're doing. They've been doing this for a long time. But the cost to buy a rate down is equivalent to 6-7 years of the payment. So, it may not be worth it to buy down right now, where the rates may be at this level, later on, or a little bit less. And then you can refinance, cash out a little bit of the equity, whatever you need to do at that point. And then just get into a house with a little bit less down payment or a little less out of pocket, because you're using whatever seller contribution you're getting, or whatever money you have into a lower down payment or lower closing costs.
And what were your recommendations, Ray? Because I know that we talked about something else, but what are your recommendations if you're buying or selling?
My main thing is, don't be afraid of the market. It's super hard to time the market at its highest. It's really hard to time it at the lowest as well. The key is the market it's a cycle. So if you're going to buy now, even if the value of your house goes down 5 or 10%, it will eventually come back up to whatever you purchased it at, and then some. If you're a seller, I would say plan ahead because of the lack of inventory. So know where you're going to go from there after you sell, because you may not have a whole lot of properties to choose from. So yeah, but my main thing would be, don't be afraid of the market. If you're a buyer, go out and buy. We'll refi the loan later. We'll get your payments down. We'll take off your PMI, and we'll reduce your expenses as time goes on.
Perfect. So basically, if you're ready, buy. If you're ready, sell. Don't be afraid of the market. Do you just plan ahead, like Ray is saying? And one last question, guys. What tools or resources is your company or are your companies offering right now for people that are trying to buy and sell?
I know at First Origin, we do a lot of credit analysis. That's huge right now because you want the lowest possible rate. So when you do get pre-approved with us, we offer credit analysis reports that we give you in order to get your credit as high as possible. That's going to save you a lot of dollars later on. So our reports will say, if you're currently a 640 or 660 score, and you need to get to a 700, it'll tell you what you can do to get to that 700. So that way you can plan ahead for a few months and pay off whatever little things you need to pay off, or maybe add a credit card or two that might stimulate your credit a little bit, things like that. So that's one of the things. And then on top of to compensate for the down payment assistance programs that we were talking about earlier, we also are offering several credits on down payments or closing costs, things like that. So
Awesome.
So
Yeah, so I think that first one that Ray touched on, I think that one is crucial, and it can even save you money on, talking to a credit repair specialist or things of that nature. Sometimes you can it'll calculate exactly how much you need to pay down to the dollar to get to that score. And if you're flipping from an FHA to a conventional and trying to make it make money sense, it definitely helps out. But as far as me personally, I do work with 96 different banks. So that does give me leverage for my clients to get, the best interest rate, the best cost for them. And then as far as, my network of realtors, I know a lot of realtors. I know a lot of good realtors, especially in this area. So it's very important to me how I sell myself to my client is to get them with somebody who's really going to take care of them. So I invest a lot of time in recruiting realtors that I know have my clients' best intentions. So that's what we bring to the table.
awesomeness.
Great.
Thank you so much, guys. We appreciate this so much.
Yes.
Thank you for taking the time to give us so much value and educate us, about what's happening with mortgage lending. We understand that the market is up and down, but if you're ready, just do it. Get, like Saul was saying, get a good team that supports you, that's going to work for you and with you, and then, just go ahead. Guys, we're going to go ahead and just wrap it up. Thank you so much. We're going
Yes.
to, if you are,
I'm
yeah.
sorry. We need to say where they can follow them.
Oh, yeah.
Please.
Yes, of course. So follow us at Magnet Monday. All their information is tagged in there. Don't forget, we also have our YouTube channel. You can view all of our sessions there, Magnet Monday as well, and keep up with what's happening with Magnet Monday and what our special guests next week. Thank you so much, guys. Anything that you want, to close out, anything that you want to, like a few tips that you want to give our audience before we leave.
Listen, don't be afraid of FHA. FHA's got some low rates right now, a lot of credits towards closing costs. So, a lot of realtors have frowned on FHA in the past. Don't be afraid of that. And again, just plan ahead, save and plan.
Yeah. First, I just want to say thank you guys for inviting me on the show. This was pretty awesome. Second off, like I was talking about a little bit earlier, everybody's situation is different, right? So if anybody watching the show needs a consultation or something, or needs somebody to talk to as far as what they should plan to do with their home purchase, whether it be now, 6 months from now, 3 years from now, always feel like you can contact me. On Instagram, I'm Sal U Loans. My phone number is 916-220-9447. I'm available always. I have no life.
Thank you, guys.
I don't think any of us do.
No. Welcome to real
We're going to
estate.
put your information. We're going to put your information as well. Thank you so much, guys. See you next Monday. And don't be afraid of the market, okay? We got this. We will survive. Bye, guys.
All right,
Thank
guys.
you.
See you.